You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. A positive start to the year with benchmarks closing with smart gains. Nifty closing just below 18,200. Sensex reclaiming 61,000. Metals and realty shine bright. Nirmal Bang's Rahul Arora sounds optimistic, says India could outperform its emerging market peers. However, flags volatility as a key concern, identifies cement, pharma, chemicals, banks, infra and capital goods as pockets of gain, remains cautious on global-facing sectors like IT and metals. Supreme Court upholds Modi government's demonetisation move by a 4:1 majority, says the centre cannot be faulted as there was discussion with the RBI. Adds that it is not relevant whether the objection of the move was achieved or not. Maruti shrugs off the 9% drop in sales in December. Top officer tells Business Today TV in an exclusive conversation that new sales records will be set this year despite the threat of COVID re-emerging. Thousands of Indians with H1-B visa face uncertain future in the US after the great 2022 layoff. Business Today TV tells you what can be done to avoid deportation to India. Frontline indices kick-starting the new year, locking in modest gains. Nifty and Sensex showing clear momentum and recouping losses throughout the day to end the session higher. Up on your screen, 0.5% or so on both the major indices. The mid-caps and small-caps also continue their outperformance, closing the day with gains above 0.5%. A nearly 3% surge on the metal index today. The real estate pack also faring quite well in the session. In fact, barring pharma, all sectors were very much in the green today. Top movers, Tata Steel, Hindalco from the metals pack, ONGC, also one of the top gainers today, followed by Tata Motors and JSW Steel, while a slow day for some of those consumption names as well as the auto majors. Bajaj Auto traded with cuts of 2% on the back of weak December sales. Losses of over 1% on Asian Paints, Titan, Cipla and Hero Moto. Staying with markets as we embark on a new journey in 2023, should investors maintain a cautious stance given the recent volatility? Should traders prioritize macros over equities? What are the pockets of gain? My colleague Sakshi Batra caught up with Nirmal Bang's Rahul Arora to take stock of this and lots more. Listen in.
Actually, anything that's immune to slowdowns to a large extent globally is something that I would like to go for, and anything that's reliant on them I would stay away from. So anything export related, IT services, etc. is something I'd probably stay away from. There are two ways to look at what to bet on. One is, like I keep going back to this point of a pre-election year and government spending. So I think it could be a good year for cement stocks, for infrastructure stocks. The Prime Minister has spoken extensively about defense and manufacturing. So, you could have capital goods as a theme also do well. If you do have a lot of projects that are announced, I think the rating agencies, CRISIL, ICRA, CARE, could also land up doing reasonably well. And I think banks should do well as well. I mean, if corporates are going to continue to borrow, while credit growth will come off, I think there is probably a little bit of a trade left in banks. I don't know if they'll keep outperforming or you'll probably head to a 55,000 bank nifty. But I think on a relative basis, it's not a relatively bad place to be. The one question mark I have in my mind is how consumer discretionary spend is going to pan out, because you've seen remarkable numbers, the kind of tourists you have traveling on aviation, hotel rooms are getting booked. If you have a good movie that's releasing, particularly we've seen that with South India theaters are packed. So I don't know how much of that will continue into 2023, but I'd keep the focus more to domestic themes and anything to do with that, and maybe domestic pharma companies as well. Something like a Cipla or a JB Chemicals would not be bad options. And the last 1 year, there's not too much that's happened by way of price movement in chemical stocks. If you remember, Sakshi, when this entire China plus one issue started in 2020 and the better part of 2021, the chemical stocks, had a rush of money that came in. That's, you've not seen that kind of frenzy over the last year and a half. So it may be a bit of a comeback. So I think cement, domestic pharma, chemicals, to some extent banks, I think infrastructure, capital goods, these will probably be the themes. Anything global is something that I would like to avoid.
So could you share some names of the stocks that you'd be looking at for the new year?
Okay. So I think some I told you, right? I think, in autos I mentioned a few names. in pharma as well. I think on the consumer side, if I'm looking at the rural theme picking up in a material way, you could look at playing it through names like Lever, Britannia, Dabur. Chemicals we spoke about. I think you could look at SRF. Agrochemicals looks very interesting to us. Something like a PI Industries or a Sumitomo Chemicals. I think, you just have to go sector-wise, and enough and more opportunities will find their way. If you go down the market cap ladder on the consumption side, we like two names. One is CCR Products, the other is Lao Palau. One is a coffee player, the other, I'm sure you're familiar with, Sakshi. They're,
Yes.
very big onto gifting and, dishes and all kinds of funky things that they do. And if the world is moving away from, bone china and things like that, I think something like a Lao Palau definitely benefits. These are very strong return ratio, cash flow kind of companies, very strong brand recall. So I think these are some of the other small cap names that sort of come to mind at this point in time. And, if Bollywood kicks off this year, PVR would be a keen pick. It's been a bit disappointing that nothing has worked in Bollywood. And the only Bollywood movie that worked, which was Drishyam, was a remake of a South movie. But if Bollywood finds its feet, then I would look at the stock of PVR as well. PVR INOX is essentially going to be one entity in the not too distant future. So therefore, I'm suggesting PVR if Bollywood is able to sort of, find its feet.
And if a small retail investor has about 10 lakh rupees to say about 50 lakh rupees to invest in, in this year, 2023, how should they be strategizing those funds?
Okay, so let's take somebody who's worked for about 10 years, right? So let's take a boy or girl in their mid-30s. I'd probably say go with 60% equities. That would probably be the one way I would look at it. 15% into fixed income, so that takes you about 75%. The balance 25% you can diversify between real estate, commodities, gold, and whatever else. I think REITs and InvITs are a great asset class. Actually, people don't really talk about REITs and InvITs that much these days. But you get, as a unit holder, I don't have too much to lose if I'm invested with someone like an Embassy or a Mindspace. These are very marquee properties that they're owners of. So I would definitely look at probably having about 10% of my investments in these new age vehicles like REITs and InvITs as well. So 60 equity, 15 fixed income, 10% REITs and InvITs. The balance you can do between commodities, real estate and gold.
A big roadblock to the disinvestment of Shipping Corporation of India could be cleared this week. Sources have told Business Today Television that the Ministry of Corporate Affairs will announce its decision on the demerger of the company. The disinvestment of the state-owned SCI hinges on the demerger of its non-core activities into a separate company called Shipping Corporation of India Land and Assets Limited. The demerged entity will hold the shipping house in South Mumbai as well as the 44-acre Maritime Training Institute in Powai. The government is divesting 63.75% stake that it holds in Shipping Corporation. Let's go across to BTTV's Karishma Sudani for more on this. Karishma?
Right, Abha, the split of core and non-core assets of Shipping Corporation of India cannot happen until and unless Ministry of Corporate Affairs gives a positive affirmative order on that. And until that happens, the disinvestment cannot proceed. Now, there have been a couple of legal hurdles on this matter. In fact, last week, an important crucial hearing was held in Ministry of Corporate Affairs in New Delhi, where more than 50 objections from stakeholders had come in regarding this demerger. Now, this demerger is going to bring a lot of issues for employees and stakeholders in terms of financial transitions and other such important amenities that could happen. But unless and until this demerger happens, the government cannot proceed with disinvestment, and the government cannot list the non-core company and call price or bid proposals for selling its tail in the national carrier. In fact, government, as per the last expression of interest announcement, is looking to sell close to 63.75%. But unless and until demerger happens, that plan will have to, of course, be held back.
All right, so it continues to be an important development for the government to have this go through. Thanks for joining us, Karishma, and bringing us up to speed with all the latest there. Barely 3 weeks ago, Morgan Stanley, a US-based investment and financial services company, laid off 1,600 workers. Now, Goldman Sachs, another US-based investment firm, has also announced layoffs, justifying it with similar financial pressures. In a letter to employees, company CEO David Solomon said that the steps were taken after carefully reviewing the situation. David said the company is considering layoffs due to deteriorating financial conditions, a decrease in economic activity, and a number of other factors still under consideration. Goldman currently employs more than 49,000 employees in its offices across the world. Financially, last year wasn't the best for Goldman Sachs. Data shows its profit in the July to September quarter fell by 43% to around $3 billion, while banking net sales were 57% lower. Moreover, its revenues from corporate lending fell by 77% and equity underwriting by 79%. Meanwhile, other top financial institutions, including Credit Suisse, Deutsche Bank and Barclays, have also announced layoffs and closure of some of their offices due to rising interest rates, inflation and other geopolitical difficulties on a global scale. The infamous 2022 tech layoffs have left thousands of Indians at the risk of deportation, as the H1-B visa requires the immigrant's employer to sponsor the visa. As per data from the US Homeland Security Department, Indians comprise around 75% of individuals granted an H1-B visa in 2020 and 2021. Business Today's Akanksha Chaturvedi joins us to shed light on some legal methods shared by the Department of Homeland Security for immigrants to extend their stay in the country. Akanksha, what are some of the options that the department has laid out, especially for Indian immigrants, since it's almost 2 months now from the mass layoffs at Silicon Valley?
That's right, Abha. The mass layoffs at Silicon Valley have left several thousands of Indians in fear of deportation. And now, since it's almost 2 months since the layoffs have taken place, it's been 60 days, the grace period's about to end, the Department of Homeland Security a couple of weeks ago came up with a number of options through which Indians, NRI Indians or immigrants in general can extend their stay legally in the United States. One option is to switch to the F1 visa. It's the student visa, where they can enroll in a coursework or in a college course, and this way they'll be able to extend their stay in the United States. The next option is to switch to the B2 visitor visa. This way they can extend their stay in the United States and look for more jobs. Another option would be to switch their status to dependent on spouse. If they have a spouse in the United States who, is working and has their own visa, they can switch to this under the H4 or L2 visa. That's what the Department of Homeland Security says. There's another option. It is to become an investor in America through the EB-5 visa. They can apply for an EB-5 visa if they invest $1.15 million in the country, or in special cases around $8 lakh, $800,000. That way they can extend their stay and they can get a visa in the United States under the EB-5 laws. So these are some options that the Department of Homeland Security has laid out for NRI Indians, if you want to think, or immigrants in general to extend their stay in the United States.
Thanks. Akanksha, also seeing how complex the conditions are to stay back, do you think NRIs would plan to come back home? What are you hearing from Indians leaving the US? What are experts saying as well?
Well, that is true. There is a lot of complexity, when it comes to the US visa. And one might think that, NRIs might, want to come back to India because there isn't a lot of complexity in our country. But when I talk to NRIs or when I talk to experts, they say that the Indian job market, especially currently, will not be able to match, the lifestyle expectations that these people have, developed living in the countries. Moreover, even experts believe that the Indian job market might not be able to accommodate them, especially since even India is facing an economic slowdown. Back to you, Abha.
Thanks for that, Akanksha. The largest automaker in India, Maruti Suzuki, has recorded a 9% fall in December auto sales. Business Today's Chetan Bhutani caught up with Shashank Srivastava, Senior Executive Director, Sales and Marketing at Maruti, about the company's plans for this year and how it intends to recapture the market that it lost to the SUV surge.
For the month of December, I think we have to look at the wholesale number a little differently from the other months. And the reason for that is that generally in December, the OEMs as well as the dealers want to reduce their inventory, both in the factory as well as the network, to as low as possible, because a lot of consumers who buy in the next year, that is 2023, would actually insist on a 2023 production vehicle.
Oh.
So that's the reason why in December, generally you would have seen retails being much higher compared with wholesales across all years, at least in the last 10-15 years. So same is the story this December as well. The wholesale for the industry was about 276,000 against 255,000 of last year. That's a growth of about 8%. And however, in the retail, the figure crossed the 400,000 mark. It was 411,000 against 320,000 of last year. That means in the retail, there was a growth of 28%. And this is, by the way, the only time ever that the retail in the industry, in Indian auto industry, for passenger vehicles has crossed the 400,000 mark. The previous highest was 382,000, which was in the month of December 2018. So from a wholesale perspective, yes, it was a little muted. From a retail perspective, of course, it has been a really good month.
Absolutely. Well, retail perspective has always been good since the past 4 months, starting September. I want to know about the New Year plans, Shashank San. I know the Auto Expo is coming up. I'll come to that later. How are bookings and inquiries looking like at your dealerships? Any ground level interesting trend or insight you'd like to share with us?
So the booking levels, if you see the December numbers, the indicators of demand, which is bookings and inquiries, they have remained pretty stable, actually shown about 18-19% growth over the previous year. The retail also, as I just mentioned, went up substantially. So things are looking stable on the demand front, although I think we have to watch out for some red flags, as we had discussed last occasion also. As far as pending bookings are concerned, Maruti Suzuki's pending bookings today are about 363,000, and in the industry it is estimated to be around 725,000. But then there is a huge mismatch across models as far as waiting is concerned. So there are many models where you see long waiting periods because the production is not sufficient. And there are some models, of course, where you would see probably enough vehicles which are available. So I think going forward, we need to watch for those red flags of inflation or liquidity, the retail interest rates, and also the general economic growth that is being forecasted.
Very interesting point you've highlighted for the year to come. Shashank San, what are electric vehicles plans? I know the expo is coming up, and I'm sure you're completely building up to it. I would like to talk to you on EVs as well. Are we on the right track as far as the EV plans are concerned?
Yes, so we have announced as earlier that we will be bringing our EV in 2024-25 financial year, and we are working towards both the charging infrastructure and building the ecosystem so that the consumer is not inconvenienced in any way. Currently, the battery costs are very high. That means the cost of acquisition of EVs is high, and also the charging infrastructure is almost non-existent. So in these two factors are what build the ecosystem. And you would be aware that we have invested big time in the battery. Suzuki has invested in the battery plant for localization, hopefully. Yes, so our plans are on course. And in fact, in this Auto Expo, we will be showcasing a concept SUV electric vehicle.
Right. And Shashank San, with the China opening up and subsequently the COVID cases also rising, is there a concern with the company or in the sector overall?
Yes, surely. So this is one of the things we have to monitor very closely. At the moment, there seems to have been no real effect on the supply chain. The recent resurgence of COVID that we have seen in some countries, including China. But going forward, we have to be very careful because COVID has shown in the previous year to have to somehow defy all the forecasts and projections, and we have to be really careful that the resurgence doesn't happen. If it happens, it could lead to supply chain disruptions, and that's something which I think the industry has to be wary of.
Well, it's been a bumper year for the country's electric vehicle industry. EV sales crossed the 1 million mark for the first time in calendar year 2022. However, while EVs seem to have caught the fancy of the buyer, the outlook for the industry is not too bright at the moment.
The lure of big savings was too much for some to ignore. Spending just 2 rupees per kilometer on an electric vehicle against 10 to 15 rupees on a petrol vehicle clearly tilted the balance for the auto industry in 2022. A record number of electric vehicles were sold last calendar year, with the number crossing the 1 million mark. The figure constituted just about 5% of the total vehicles sold in the country. Unit sales crossed the 100,000 mark during 3 consecutive months from October to December. The push was led by individual buying and B2B sales to fleets and e-commerce delivery agents. The big winners, Ola Electric, Ather Energy and Tata Motors. Tata Motors, with its wide electric range of Nexon, Tigor and Tiago, crossed the 50,000 unit mark, capturing 85% of the personal electric vehicle market. Despite a great start, the EV industry has begun the new year with a great caution. All eyes are on China and the severe impact of COVID in the mainland. According to industry sources, production of raw materials and spares in China's factories is down more than 50% since the pandemic spread last month. Despite progress under Make in India, the supply chain for the EV industry is highly concentrated and dependent on the northern neighbor. Raw materials required for batteries include lithium, nickel, cobalt and graphite. In most of these materials, the production and the markets are cornered either by China or its companies. It also dominates the market for processing these minerals. Among cell components, China produces 2/3 of anodes and 3/4 of cathodes. It also has 70% market share in battery cells. Sources say that while Indian EV manufacturers are well equipped for January to March quarter, any disturbance in the supply chain could cripple production in the coming months. There are other factors in play as well, which are forcing EV players into a wait-and-watch mode. The charging infrastructure is still patchy, forcing customers to put off buying decisions. And companies are reluctant to invest more in the sector till a long-term policy is announced by the government. Interestingly, the government has set an ambitious target for 2030. It wants EVs to make up 30% of personal vehicles, 70% of commercial vehicles and 80% of 2- and 3-wheelers. However, to turn this goal into reality, the industry is looking at more than just PLI schemes. Investments in R&D and building alternate supply chains has become a big focus to ensure that the Indian industry has enough protection to face the Chinese headwinds. Bureau Report, Business Today Television.
That's where we leave it on the show tonight. Thanks so much for watching.